I'm in New York City for REIT World 2010, which commemorates the 50th anniversary of REITs. Joining me is Ken Rosen, chairman of Rosen Consulting Group and Rosen Real Estate Securities. Ken, you've been involved with real estate research and investment for more than 30 years. In your view, how do you think listed REITs have changed the commercial real estate landscape?
Right. Well, I think the modern REIT era began 17 years ago, in 92, and we've had over 100 companies come public, and I think it's changed basically everything in terms of the investor's view of real estate. Normally, it was an illiquid investment that you didn't really have the opportunity to have any transparency, and REITs have added liquidity, transparency, and really great management teams. So when you're buying, you don't buy a building anymore, you buy a portfolio of buildings and a management team and a capital structure. And I think it's made investors, broaden the investment base dramatically to individuals, and for institutions it gives them another option that has got great characteristics.
So with the momentum that was built through this most recent decline, where do you think the industry goes from here?
Well, I think that the fact that we were able to recapitalize, raise over $80 billion of equity and debt, and the private sector still has difficulty raising money, I think it gives an opportunity for those best-in-class management teams to double in size again. I wouldn't be surprised to see another 50 companies in the U.S. and large numbers of companies worldwide adopt the model that we've really pioneered here so well in the U.S.
And you've written numerous articles, several books on real estate finance. So you're one of the most well-known commentators on this industry. If you were going to have to write the story of the REIT investment proposition having come through the last several years, what would you write?
The fact that they were tested in the stressful period of March 2009 and really all 2008 and 2009 couldn't have been a more vigorous test. We only had one bankruptcy. And of course that's now working itself out and has come back to the marketplace. So I think it shows that you can have public real estate companies survive and thrive in even the worst of worlds. Even though it didn't feel like that in the first quarter of 2009, I think everyone was pretty worried about their existence. So it's very impressive, but I like the transparency that you get. You get visibility. So I am now using REIT data for our market data on the apartment sector, because the REIT data comes out every quarter by market. Everyone gives it out, and it's better than it is any of the private sector measures. So right now, REITs make up a small chunk. Equity REITs make up a small chunk of the total real estate equity. My guess is that will double in the next 10 years, and maybe even triple.
Great. Ken, thank you very much. For more from REIT World 2010, be sure to visit REIT.com. I'm Matt Bishar.